and all the sessions in this event. So we have already explored the big pictures, policies, payment landscapes, digital identity, and today in the morning session we explored digital assets, CBDC, blockchain, and recently cybersecurity. Next, on to our last session of the day. We wanted to end the day by giving you a futuristic insight of what is yet to come, as well as insights into what has already happened for what we would like to call the new financial revolution. Welcoming onto the stage, please join me in welcoming Chief Technologist, Amazon Web Services, Mr. Olivier Klein. Olivier, the floor is yours.
Thank you. Sawadee krap, and hello to everybody in the room, and hello to the ones on the live stream. Today I want to take you to a variety of different things from a technology perspective. So I'm a technologist for Amazon Web Services, and I'm going to share with you a little bit on what we do, but I primarily want to share with you what some of our customers are doing and how that relates to some of the, what you could call a financial revolution. And I believe that technology and cloud computing especially will help you to accelerate that innovation. But before I get into that, I always like to kick it off with an idea. And here I want to quote the CEO, now the CEO of Amazon, Andy Jassy. He always said, innovation requires two things: the ability to try a lot of experiments, right? Experiment around, and not having to have to live with the collateral damage of those failed experiments. Meaning, if we can run experiments at a very low cost without too much damage that we can do, then I can gather feedback really quickly, and based on that, I can reiterate, see if this idea or this direction is good, and I keep going forward, or it's not so great, I go and revise those ideas back and re-experiment. That is what is generally driving innovation. And I want to put that into perspective. Let's take the following number, over 150 million. What could that be? Over 150 million is the amount of live code deployments across Amazon in a year's time. So that means that on average, we have 4.5 deployments per second. So every 0.21 seconds, there's a live code deployment that goes out. That is how we drive innovation. That's how products like or services like AWS have come to fruition, because people can push code, it automatically goes out, and they're automated systems that allow you to try it out, try it on a smaller user base. If it works, then roll it out. If not, roll it back in. And that's kind of the premise that I want to talk about when I talk about all these different innovations that we see with our customers in the financial service industry. And this is also one of the reasons why I believe that cloud computing is already the new normal, but it should not just be some other data center. It should not be just some other database that I'm using somewhere. It's the ability to get access to great capabilities around machine learning and data analytics, or HPC and grid computing, and do that as a fraction of the cost at any kind of scale that we're having, so that I can transform my business. All right, so that is it for AWS. Now I want to talk about what people do with AWS when we talk about financial services, which is I first want to look at some of the digitization that we see here, what that means. Some of the things like embedded finance, finance as a service. I loved all the discussion earlier. I love the discussion about decentralization in Web3. I want to look into that. And of course, data, AI, and machine learning, and also how we use that responsibly, because we also want to make sure that we don't misuse some of these technologies. So if I think about digitization of financial services, right, you might think about, well, what are some of the things? Okay, that could be something cool, like you might have seen the Swedish startup that came up with fingerprints, where you have your actual credit card has like a fingerprint reader on top of it that the POS system can read from instead of entering a PIN. Okay, that could be innovation. Or maybe earlier we heard, from a variety of our speakers earlier around the EU currency, the digital new currency in China, or the fact that we use QR code everywhere in China rather than touching physical money. We could see all of that about as digitization of financial services. But the way I look at it is actually that, what it means to be a bank is completely shifting, right? These kind of mega trends are forcing traditional kind of businesses to be disrupted by incumbents. And we've seen that in the space of the hotel industry, where Airbnb came along. We saw it with Netflix or Spotify in the entertainment industry. And we now see the same thing, where incumbent players, traditional kind of banks, are getting pressurized because their legacy footprint and infrastructure is not working anymore at the same scale and a rapid kind of innovation that we're driving. Now you see a lot of these digital banks pop up, or neobanks, new banks that we kind of see. These disruptors that are creating new, better customer experiences with the help of machine learning, cloud computing, data analytics. I'm going to show you examples there. Revolut is, for example, a good one out of the UK. I'm going to show you a few in the region. But then the bottom ones are interesting. I'm going to dive into that much more later. Banking is becoming integrated in all parts of your life, and very often not to an actual bank. You might use different kind of applications that are now actually making it really easy for consumer to address their financial needs, right? And we're going to talk about embedded finance in just a bit, all the way to complete non-finance brand that actually doing financing. By the way, I didn't put the Amazon logo there, but Amazon would be one itself too when we talk about the e-commerce part of it. But SaaS platforms that are basically integrating it into their brand. That is kind of the disruption that I'm thinking of here. And so if we look at some of the macro trends that we see with our customers on top of AWS, that might be moving to digital banking, moving to open finance, moving to open APIs. And that's what I'm going to address in a bit. That might be a democratization of capital markets. Think about stuff like Robinhood, not the Thai Robinhood, but the American Robinhood company, where you have stock-free trades out of an app, right? I can trade for free, basically, very easily. Right? That drives potential volatility in the market. Can be good, can be bad. You must be on top of it. Data analytics will help you there. Insurance channels, right, which are completely different. I don't go to my agent anymore. I want to be insured through an app. I maybe just do it to my WeChat app or what have you, right? All the way to payments, where we obviously stuff like contactless payments, already normal, used everywhere, but all the way to QR code kind of payments, all the way to buy now, pay later, which is a lot more interesting. So how do I credit score? At the same time, there's a push, and I think we heard that in the panel just now. Legacy systems need to be modernized. COVID-19 pandemic has massively accelerated this, and I think we've seen that also here in Thailand. I love the earlier presentation in the morning about how many people are now banked in Thailand. I think it was over 80% have a bank account. A good push of that came, not thanks, I shouldn't say thanks, but because of the unfortunate event of the pandemic, people suddenly use digital payments, right? At the same time, I think there's this trend of, if I don't leverage my data, I'll be behind, right? If I'm a financial service company and all I care about is my mainframe servers and some data warehouse, you're already losing out, right? Because you want to build a good customer experience. And this is where it becomes interesting, because it's not just a customer experience that you are creating, but with all the other companies that you might partner with or have embedded finance with. One of the interesting things that I see here is, earlier I mentioned cloud computing is kind of a core component to it. Why? If you look at fintech startups, they all build on cloud computing. That might be on AWS, might be on other platforms. If you look at the FinTech 50 ones in 2019, they would be on AWS. But just take a few examples here, right? That might be a cryptocurrency exchange like Coinbase. They need to do real-time processing. They do that on top of AWS. That might be a new bank. For example, in Latin America, there are plenty here in Asia Pacific, but I wanted to choose new bank. 53 million customers, they build it out of nothing. Robinhood, I already mentioned that, right? Transacting over $1 billion through a mobile application app. Stripe, right now really growing fast, running their PCI-compliant platform on top of AWS, or TransferWise, which became Wise, or Affirm. And you can see these startups, why do they use cloud computing? Because you start from zero and you only grow based on what you use. That is awesome. And I can get access to the latest capabilities that are constantly improving. That's why I want to build on cloud computing platforms. But there's one other element which I think is really good. And I love that this comes right after this panel. Security and compliance. I believe that it moves from an obligation to something that you can make your advantage as a company if you use it effectively. And why is that? Well, traditionally, I might have said, okay, if I move fast, then I might need to be careful because I cannot stay secure then, right? But I would challenge that view. If you use cloud computing platforms and you use them correctly and effectively, you can move fast and stay secure at the same time. By the way, technology is one thing. There's also element about how you lead your teams, how you build your software, etc. But I want to share with you the technology aspect. Think about a traditional data center like this, right? You have servers that you rack and stack, network cables that you attach to it, you label it, maybe you go around with a clipboard and you see, if I unplug this cable, I need to note that down, maybe put it in an Excel sheet somewhere. That is not really great. Well, the new world of cloud computing, no matter which provider you use, but in AWS it would be this. Everything is inventorized at any point in time. You know exactly what is happening. Any change that's happening, you already know about it. And you have an entire event history of any change. There's a server that has been launched. There's a network that has been connected. There's a user that has been added. And at any point in time, I can see an exact inventory of what's happening. Why is that relevant? Well, because now I can build continuous compliance. Right? I have an unprecedented visibility. I see everything that's happening at any point in time in near real time. And now I can, in near real time, automate this. Not just warn me, but maybe even stop that change or revoke that change, remediate that change. And that allows me to have continuous compliance. So I know exactly who did what, from where in real time, and I detect any misconfiguration, any non-compliance, and automatically then can respond to it and maybe remediate. That's what I want to have. And by the way, if you don't have that, you want to know, please talk to us. We're more than happy to help you with our security experts to build that out for you. How that would look like in an AWS setup, that could look something like this, right? Where all your activities on your virtual servers, your EC2 instances, or your data in your S3 buckets, or CloudTrail, which basically looks like any activity in your AWS account, and say, I want to validate that against requirements. Let's say I want to be PCI DSS compliant with AWS config and config rules. You can automatically say, am I at this exact point in time compliant? And if I'm not, I can automatically remediate it, either way automatically or by manually having someone look at it. Now again, I don't want to make this too much about AWS. That's how it would look like there, but that's the kind of thinking that we want to have. Now the other thing is, you also inherit a lot of security standards. So I think this was a question earlier in the panel. I really liked that. What can we do? Right? The one good thing is that your third-party provider, also you offload a lot of these responsibilities onto them. So let's say, for example, AWS. Right? With AWS, you inherit a lot of these global security and compliance protocols. Right? That might be an ISO 27001 or 27017 standard. That might be an SOC 1 or 2 or 3 on how I run my physical facilities. Now, if I just show these logos, that's a nice to have. You might be able to tick the boxes, but what does that really mean? Take something like an SOC 1 on SOC 2. It looks into how do I actually operate my physical data center facilities. What happens if I have, let's say, a storage, a hard drive that reaches out of life cycle, and I need to destroy it? How am I going to go ahead about it? I take it out and I put it into the trash outside? Of course not. This is how it would look in AWS. If a storage device reaches its end of life cycle, it gets wiped, obviously, to software. It gets degaussed, demagnified. Then it gets punched, and then it gets shredded, and out you get that kind of dust. That's kind of that protection that you get automatically on top of a physical hardware devices here. That is what an SOC 1 or 2 means. But you can take it further. It's not just about these passive things that we might be doing that you get automatically out of the box. It's also what you lay on top of it. So let's say you're a financial service company that operates in an American market, on an American trading market, and you might need to comply with an SEC rule, the 17A4F. I guess a lot of you are familiar with this, where you need to store data or transaction data for 7 years in a non-rewritable, non-erasable format. So either way, you can now set that up yourself and have that audited, or you use something like an Amazon S3 object lock or Glacier Vault lock, and you automatically get that compliance. So a lot of these things are now out of the box for you if you use them correctly, and that is why these fintech startups are all basically looking into cloud computing to do so. In addition to that, we talked about availability. That was mentioned in the panel. This is a really important point, for example, for AWS. From the first day onwards on, from 2006, when we launched AWS, we designed with a region principle where we call it availability zones. So wherever which region we launch into, we launch at least 2, actually right now, minimum 3 availability zones, which are independent clusters of data centers and independent network grids, independent power supply lines, etc. Basically, you reduce the single point of failure. And also just want to take this moment to also mention that we did announce our investment into Thailand and that we are currently building out the region here in Bangkok itself. And we also committed to invest over 190 billion baht, so that's about $5 billion US, into Thailand. That's how we are committed to the region. That is obviously over build-out of data center facilities, people, and training, etc. Now, with that in mind, let's talk a little bit more about the financial aspect here. So, one thing that is often talked about is finance as a service or embedded finance. And I wanted to go a little bit deeper here and give you a few examples of what we do with what our customers are doing together with us on top of our platform. The first thing I would say is why should I be open? Why do I need finance as a service, right? It's a good question, right? Maybe I'm a bank, I'm functioning, I'm making money, why should I care? I believe that open banking is an opportunity to create much better customer experiences beyond what your own company can do. That can be, I can build an entire technology ecosystem even though I'm not a technology company. That can be open up complete new distribution channels for your products, your services. That can be integrating new fintech companies into your value chain. They shouldn't disrupt you. You should work together. Now you can integrate them. That can be about aggregating customer and transaction data which might come out of the financial service space. Right? That is what I can do, and vice versa. And then why do I do that? So I can maybe personalize my offers, can give better customer experiences, maybe insure people, do better underwriting, etc. And of course, also do stuff like continuous delivery across different portals, devices, platforms, countries, geographies, etc. The next question, though, is, okay, that all sounds good, but how am I going to monetize this? What's my value proposition or my business model I can put behind it? Now, this is not a complete list. This is just my ideas here. That can be things such as API marketplaces that I, as a finance company, want to build. I can create a bank service ecosystem right now, right? I can charge for my API connections. Whoop, I just became a technology company, even though I was previously a bank, for example. That can be aggregators, right? We see that already happening in a lot of markets where you have one bank account and you can link all your bank accounts together, right? And you see all your bank accounts in one specific app. That can be good, right? Because it allows me to have a multi-bank offering. Again, remember, your customer wants that. If you're not doing it, you're already losing out, right? And that allows you then to that partnership that I talked about, fintech companies, right? I can now easily deliver high-class products through another company, and I'm going to talk about that when we talk about embedded finance. And you can do a revenue share with those partners. Now, that revenue share might not be ideal initially, but now you have a complete new channel that you roll out, right? All the way to API vendors, and of course, banking as a platform, right? I think that is probably core to why a lot of folks launch open banking. And I want to give you a few examples here. Let's go to Indonesia here for a second. Take Bukalapak. They're a large e-commerce provider in Indonesia. And they basically went ahead and said, well, we want to create digital wallets, but we don't necessarily want to become a digital bank. It's not our core business. Standard Chartered opened their banking platform up, and Bukalapak said, that's great. So if you now open one of their digital bank accounts there, you're actually under the hood running on a Standard Chartered bank account. Well, guess what? Obviously, when that goes well, other companies come on top. NTUC in Singapore said, hey, we want to create a new bank, Trust Bank. Don't want to deal with actually managing or being compliant and becoming a digital bank. So, hey, Standard Chartered, why don't you manage my bank accounts under the hood? I create a new digital bank called Trust. I have my new customer base, Standard Chartered wins, Trust wins, NTUC wins. These are good examples of creating these kind of partnerships together. Now, by the way, you do have examples here in Thailand too. You might have heard of the Thai Credit Retail Bank. I'm going to share a bit more about their use case later. But they went ahead and they retransformed their platform and said, we want to create this Lego-like platform, right? Like take all our core banking systems, our bank general ledger, etc., but then put a front door in front of it, put an API management layer in front of it, put an entire open API developer portal on top of it. And why? Because now you can have digital banking, you can have fintech firms, you can have different banking customers that can connect to it, and that enables that collaboration. And later on, I'm going to show you how that's being used to actually change people's lives to a certain extent. And of course, this now allows you to also refocus some of your capabilities of saying, well, maybe I want to add some AI, machine learning, data analytics, advanced analytics capabilities to it, and that's all at my outer layer. I can basically have that in a separate kind of company, for example. So it gives me a lot of flexibility. Of course, it comes also with certain care that we need to take when it comes to compliance and security, but that's kind of what we want to address a little bit later. Now, what that again means, this is not a complete picture, but just to paint that out, it allows you to say, I get a new channel to a well-recognized brand, and I plug and play things under the hood with a nice little banking as a service stack or finance as a service stack, right? And now you can have all these companies that actually focus on what's core to their business and together build one journey with a customer. And again, that banking as a service or finance as a service offering can vary, from maybe just looking at financial products to entire embedded journeys that we see with some of the super apps that are happening out there that are now getting into financial services through collaborations like this. What does it look like in terms of AWS? Of course, AWS stands for Amazon Web Service. Everything is a web service. Everything is an API. And as such, it is bread and butter for our business to actually build APIs on top of it with many different services that allow our financial service customers, our super app customers, our e-commerce customers to kind of nicely integrate together. And again, this can now be potentially a click of a button because those same customers are on the same platform, right? So that allows you to quickly connect these things together. Now, talking about connecting things together and centralization, let me go to decentralization for just a second. Just have a zip here. Thank you. Decentralization is an interesting point, and I had a very nice lunch discussion about it earlier. If we talk about decentralization, we often talk about Web3. Now, I think most of the people in the room and on the line are very much familiar what that means, from a Web 1, where it was really like that read-only kind of, to the Web 2, to everybody collaborates, to we have cloud computing, we have a certain centralization, to a Web 3, which is more like a read-write-on. Now, I want to call out that Web 2 and Web 3 will run in parallel. Web 3 is not a replacement of what Web 2 is, but Web 3 will address an additional set of things that are quite interesting. The first one is that we're looking into how can you be in control of your own data? How can we operate, platforms that are not centralized, where the core trust of the platform is not because we use one company, but because we trust, for example, the blockchain protocol that can enable that trust between untrusted parties. All the way to more semantic web, more AI-driven kind of use cases and machine learning use cases. And I'm going to address that in a little bit. But I always like the Dilbert's comic here. He's like, boss comes around, I think we should build a blockchain. Uh-oh. Does he understand what he said, or is it something he saw in a trade magazine ad? What color do you want to have that blockchain? I think mauve has the most RAM. I like his comics. I think blockchain has obviously been talked about a lot. It has become one of these new buzzwords, but there is actual value to it. A lot of our customers are experimenting in many different industries. You see here all real use cases, and I'm going to share a few in just a bit, that build on top of AWS with blockchain as a protocol, from things around proof of ownership, to digital security trading, to mortgage loans, to voting mechanisms, to corporate governance, etc. And obviously, again, I think it was talked about a lot earlier, from smart contracts to digital currency. Might it be a central bank digital currency, or maybe more of a distributed kind of currency, all the way to cryptocurrency, maybe to securities, to overall record keeping quite interesting in the logistics space, for example, transportation space, and blockchain being as that central kind of technology that's there. Let me give you a few examples here of how it's actually being used, so that we don't just look at the what is possible, but actually what is happening. You take, for example, Kaleido. It's a consensus business and a partner of AWS. You can also get it to the marketplace. They went ahead and worked with Union Bank in the Philippines, and they said, let's create the project I2I. And the idea here is I take it you're familiar with the Philippines, lots and lots of islands, lots and lots of rural areas, and lots of these rural areas have their rural smaller banks. Now, those smaller banks don't always have the capabilities to use the systems to connect everything together. So they said, hey, that would be a great place to connect these rural banks together with what they call a closed-loop crypto cash solution. But basically what it does, it connects all these rural banks now back to Union Bank, who then banks it out. So that's potentially enabling financial inclusion here, but I'm going to get to that in a little bit more. In this scenario, it's primarily bringing people back into that main financial infrastructure without them, investing hardcore into technology stack. That's a good use case for blockchain. Let's look at another one. Let's take trade and commodities financing. The trade and commodities financing, super easy on the financing part. Well, I shouldn't say super easy, but that's the easy part. But how do I actually track my commodities? How do I understand how they moved around, how they have been processed, etc.? Right? And that's another really great use case to actually bring in blockchain, because I have validators in between. I have a immutable ledger. I know exactly what happened across untrusted parties. Right? Comgo, for example, again, together with Consensus, they're pretty good in this space. They digitized their trade and commodities finance through a blockchain-based open platform together with some of their end customers. You see the logos there. I'm happy to go into more details offline to look into that. But, connecting, again, different people together, banks, trading companies, inspection companies, energy companies, or people in the energy sector. And that's the key point. I think that's where the value sits. If I'm just connecting my banking systems together, I don't really need blockchain. It might help me to get a little bit faster in doing it, but I probably figure it out otherwise. This is a true use case which, well, otherwise would not be so easy. How does that look like? Paperless one-stop shop, right? Speed, security, efficiency into knowing exactly what's going on. Producers, which might be banks and financial institutions, provide credit and commodities, insurers, major companies, in between that connected platform that connects it to traders, manufacturers, end purchasers, shipping companies, and in between the connected platform that write their data onto the block, into the blockchain that now becomes part of that immutable ledger of what's going on. And what's my agricultural trading platform, my shipping platform, what is this telling me? And I basically write that into my blockchain. That is a real true use case of really bringing in that value that we otherwise might not have had. And bringing trust to untrusted parties here. Now, obviously, our help here with AWS can be across all layers. I think when you saw the same presentation earlier from Google, cloud computing companies are, of course, across all of these layers, from interoperability to running your consensus compute, to running maybe your smart contracts, to all the way to DApps or dApps or decentralized applications, decentralized finance, etc. And of course, again, putting exchanges here on the side. So if this is a space that you're in, definitely worthwhile having a conversation with myself or any of the other AWS colleagues of mine. Now, the other thing I wanted to focus on briefly is data and data analytics, right? So everybody is always saying data is the new gold. I would absolutely agree with that, and I think we understood that 10, 15 years ago, 20 years even ago, when we started mining data, and then it became big data, and then it became advanced analytics, and suddenly it became machine learning and AI. But what it really is about is I want to get a better understanding of my end customer. Or you can call it personalization, recommendation, customer segmentation, no matter what you call it. In the end, it comes back to the idea of I take a lot of data and I funnel it back to the point where I understand, ideally, every individual customer, from a mass market to segments, to clusters, to personas, to the individual customers. And the tools on the left-hand side help me do that. Big data, AI, ML, real-time analytics, and in real time I identify that customer and even provide them with a good experience. Now, what I need for that is obviously a data lake. Now, the good news, again, cloud computing can help here to actually allow you to build one or many compliant data lakes on a very cost-effective model, because you basically decouple compute and storage. You store massive amounts of structured, unstructured, semi-structured data very cost-effectively, and only when you run your analysis, you actually need to pay for it. And also you can connect all these different data sources to it. So that means I can store any kind of data from my ERP CRM system, automatically have it loaded up. Because most cloud providers, or AWS, for example, would have SaaS integrations into your Salesforce, into your Marketer, into your Zendesk, right? I can load up unstructured data like pictures or compute or even phone transcriptions that are then pushed to a transcription service to understand and get better insights, all the way to data exchanges like, let's say, for example, a Bloomberg B-pipe automatically integrates into your AWS data lake. Just to give you an idea of what that means when we talk about scale and why you need a certain style of a data lake. So take, for example, FINRA. Again, I take it most of the people in the room are familiar with it. It's the financial regulatory authority in the US. So they basically look at all the stock trades that are happening on a NASDAQ or a New York Stock Exchange. So they need to inject all of the stock trades that are happening. And in real time, as close to real time, they want to basically identify problems. Problems meaning non-compliance on an activity in a stock market. Just to give you an idea what that means, it's about 150 petabytes worth of data. And they went ahead and said, we want to use a newer technology. They've been doing this with Hadoop clusters on-premise. Eventually, they brought that all onto AWS. And then eventually, over the last few years, they said, I don't even want to run a cluster. I don't want to run a Hadoop cluster. I don't want to care about this. I want serverless technology. I want you, AWS, to manage all of that. I want a solution where I can run my queries, and they should come back really quickly, and I should be able to do that at a petabyte scale, and I want to pay close to nothing for it. And we said, no problem. That's what we're here for, right? So to give you an idea here, any query will have to complete within 17-second response times across that 150 petabyte worth of data. That's if you use a proper data lake like this. They actually use Amazon Athena, if you're curious about it, at only $5 per terabyte scan. That's extremely cost effective and in real time. So that's the kind of scale that we're talking about here. In addition to that, if you can do things so cost effectively, you can do one more thing, which is really cool. You can say, I don't need to deduplicate data. Anyone who ran a data warehouse probably heard of deduplication. Deduplicate, right? Like that I save cost because I have less storage, I can save cost. But now, if I want to run a query, it's really difficult, to manage compliance, to get it, working in good speed, to be able to do it in real time. So one of the newer concepts, because storage right now is really cost effective with a cloud computing provider, I can build a data mesh architecture where I say I have multiple data lakes, no problem. Data lake A, B, C, different lines of businesses, different data lakes, some of them aggregated, some of them not aggregated. I put a data mesh catalog in between. And now business people can go out and build business applications on top of it and just select from product catalog which data they want to access. This is a simplified diagram. It would obviously has continuous compliance attached to it because that's the key point here. Because now you can put that aside and actually say whenever you request data, no problem, that automatically works to the catalog, but I can also make sure that you're compliant at any point in time. So data now basically becomes a product, and I democratize that data, so self-service data, to all my lines of businesses. Again, cloud computing, of course, here being a driver to make that cost-effective for your business. Now, let's talk a bit about why data is relevant, because in the end, I want this to be about what's the outcome. Okay, cool. Thanks for telling me about technology. Sounds good. Want to have that, but why would I do this? Take, for example, lending, right? Credit lending. If you think about traditional credit checks, they don't cover a large portion of the population. Here I take a few examples here, right? 2.5 billion around the world don't have a credit score. I actually don't know if I have one. I never lived in the US or a country that does a credit score properly. But more importantly, a lot of people are financially underserved. Take in Indonesia, 83 million people are financially underserved as such. If we look at debit cards or credit cards per capita, even globally, and I have 5 in my pocket right now, so I'm driving this up. A lot of people would drive this down. It's still not 1. So that means we're actually not really getting the right amount of credit information very often, so we can't really do lending effectively. But actual customers want quick, fast response to credit loan that I want to get approved. And we talked earlier about buy now, pay later. That requires this kind of lending. So how do we put that then together, right? Consumers want high speed, I want low effort credit approval, open an app, short processing time, good experience, high quality in my super app, immediately get credit. To do that, then companies must obviously analyze very large, diverse data sets that are not always belonging to their companies, but many other companies. See, going back to that open API, it all comes back together. I need to be able to prevent fraud. If I lend you credit and you're not paying it back, well, that's not good for me, right? Then I can only offset it by selling my debt off later. And of course, I need to protect my financial, social data, that I bring across from all these platforms. I need to make sure that I make that compliant, that I don't, leak that data out accidentally, and of course do that with different kind of data points, structured, unstructured, etc. So that's kind of where we want to get there, and that is really why we want to have these kind of good kind of data lakes where we process it, and that's why I talked about that technology. I'll give you a few examples of some of our customers, what they're doing. Take, for example, FinExcel. They use deep data analytics for instant credit financing. Their product is actually called Kredivo. This is in Indonesia. And basically what they do is they use those data analytics on a lot of different data points that they get from different systems, data points, mobile data information, etc., and then run an automatic credit scoring automation. Do that in real time using real-time analytics with Amazon Kinesis is a real-time stream together with Lambda to calculate that out. But that allows them to process 20 to 30 gigabytes of raw, unstructured data daily at a very cost-effective manner. Because they can do that, they can now give that really great customer experience to their end customer and say, your credit financing is approved really quickly through an application. By the way, this is not a single use case here just in Indonesia. We see that across. So companies can make much better credit decisions because they can inject a lot of data. They can credit score it really quickly. Take in India, for example, Credit Vidya, another great customer of ours, looking into over 250 million financially excluded citizens. How can I actually include them and provide them loans? Again, here, and this is interesting, so they leverage not just payment and financial behavioral data, but even device data stored on smartphones to determine loans applications. Now, again, I want to obviously say that depends on the country that you operate if this is compliant or not. In this scenario, I find it a very attractive way to actually include people financially that maybe previously didn't have this chance. Or Lando, same thing. They built the entire infrastructure on AWS to give them, again, that flexibility to basically look at an application that can have up to 12,000 data points quickly and then give a credit decision. Or Incred is another example here, again, doing exactly the same thing, minimize the credit processing decisions and loan applications to a very short period of time. That's kind of why we're looking into how can we use data effectively, why we want to use cloud computing providers and the partners on top of it. Might be your Databricks or your Snowflake or what have you. That is kind of what we want to use so that we can make these decisions better, faster, and build better customer experiences. All right, last thing, AI and machine learning. Okay, I think we all agree that it starts to have really important impact, and I want to share you a little bit on examples here. But I also want to look into how can we make sure that we keep it responsible and that we keep it also compliant. We don't want to have a black box scenario with my machine learning models. Now, first things first. Again, how do we use AI machine learning in a financial service space? Well, it's so broad. Right? That might be an improved customer experience, right? Onboarding, better KYC. We saw that with the ongoing pandemic, right? Suddenly I need to digitally onboard people. I do an eKYC of my customer, facial recognition technology. That might be enhancing your customer experience with chatbot functionalities, call center optimization, call center transcriptions, right? Automatically reach out, segment my customers. Document processing, right? I would believe that we shouldn't even have physical documents anymore, but they still lie around. Well, let's automate that, but also use that as an opportunity to do better due diligence, right? Credit decisioning, underwriting, just talked about that. Fraud detection is another really important one. When we do credit decisioning, fraud detection is equally as important. I need to understand fraud, right? And again, rely on providers such as AWS to use their engines to do better fraud detection, all the way to personalization and predictive analytics. Many, many different use cases here. Now, from an AWS perspective, we obviously provide you various different services here that allow you to do these kind of use cases from fully managed AI and machine learning services to your own machine learning algorithms, to machine learning algorithms that you can run on top of your data securely in your account, but built by other people. Now, the fully managed AI services can be around computer vision and natural language processing and document processing, etc. Anomaly detection, fraud detection. Right? You get access to the same fraud detection algorithms that Amazon.com is using, the same personalization algorithms that Amazon.com is using. Those are great capabilities that you can use. Again, this is the key point here is this cloud computing allows anyone to get access to the same technologies than some of these large technology companies, such as Amazon itself. Take an example here. I talked about KYC, know your customer. How can I basically approve an individual? I can do, for example, facial recognition technology. If I want to do that and I want to use facial recognition technology, maybe I use Amazon Recognition, which is one of these fully managed AI services I just talked about. Take ELA credits in Nigeria. They had exactly that problem. They said, hey, I want to onboard people digitally through my app, and I want to do a KYC verification with liveness verification through an app. Well, I can now do that using some of these services. By the way, I went to the booths downstairs. There's some great startups downstairs that also provide some of these eKYC services on top of your cloud computing platform of your choice. ELA, and now by doing that, instant loans can provide instant loans to individuals by onboarding them digitally. Right? Those are the outcomes that we want to do. Verifying people in real time without any human intervention, unless the machine learning algorithm wouldn't be giving me the exact accuracy, and I get to that in just a bit. With just this part. This is actually from a research paper where you can create a general adversarial network, or a GAN network, which is a deep neural network, where you can basically create fake sunglasses or modify pixels in your video stream, and by that can impersonate another person. And yes, if you were to wear those glasses or even just overlay them, you would be recognized by most facial recognition technology as the person that you see below. All right? So that's obviously a problem. Now, that's on a picture. And this is where this liveness detection comes in. I mentioned the companies downstairs. We also provide you with some liveness detection frameworks that you can actually just get with a click of a button and run them. And the idea here is again, make sure that you're actually talking to the person, or your AI model, make sure that it's communicating with that person and that person actually exists as such. One more thing that I wanted to dive in here with that is, though, if you say, okay, I don't just want to use what Amazon is providing me with, I want to build my own computer vision network. Now, the good news is this computer vision networks basically use convolutional neural networks, or CNNs. Don't worry, I'm not going to go any deeper. This is the most technical slide of my entire presentation. But basically, convolutional neural network is a deep neural network that allows me to replicate the same way that we would see, or animals would see, with their visual cortex. Now, the interesting thing about that is that you basically take a picture and you look at it step by step and you go deeper and deeper. It's the same way the way we look, right? If I look in front, I see the camera here very clearly, and I see the edges not so clearly, so I might not be able to identify until I would zoom in. Now, a machine learning algorithm works exactly the same way. Now, why am I saying that? Because it allows you to do retraining of neural networks. Now, this is not exactly 100% accurate from a scientific point of view, but I tried to simplify this a little bit for the sake of discussion. You can have an image classifier where you can basically say, I identify, maybe a certain document, a certain picture, a certain person. Now, if you start that from scratch and you build such a deep neural network completely from nothing, you would need to have potentially millions of training hours to actually get to a really good working model, which obviously I'm not going to do that, right? Wastes time and wastes money and wastes computing power and is not sustainable. But I can use existing models, such as, for example, some of the models that if I use AWS and Amazon SageMaker, I would have an inbuilt algorithm that is pre-trained with the most classic features to do computer vision, and I go ahead and I just retrain the last classifier down to what I want that to be trained. So that could be an example of saying, I want to do a document processing, I want to validate IDs. Okay, AWS has the IDs for some of the countries I want to use, but maybe not on some of the others. Well, then I can go ahead and take the existing one and retrain it, right? And maybe I gave you a few samples here of, maybe here I retrain it to this is a Hong Kong ID or a Singapore NIC, or maybe here's an invalid document. And all you need to do is give a few examples of these documents and then retrain on an existing kind of deep learning model. And suddenly within minutes or an hour, you have a functioning model with a fairly good accuracy. Again, this depends on how difficult your computer vision problem is here. But my key point or my key value here that I want to talk about is don't go and build everything from scratch. Even if there's not a fully managed service available doing exactly what you want, there are ways to actually still retrain very simplistically but get a very good accuracy out of it. And that also works really well when you process structured documents. Again, there are fully managed services out there, but you can also take that and take the output and then put your own retrained classifier on top of it. So that allows me to really build my my own entire way of extracting information out of a document. Very useful if I have different languages, different countries, different ways of running these documents. But we do also have fully managed services here. I want to give you one example and probably know Broadridge, right? So one of the things that they need to do is they got to extract information out of proxy voting forms. So previously they had a complete human review of all these proxy forms, get the insights and then actually, get the outcome that I want to have. And they went ahead and said, well, let's automate that to some extent. Let's use something like Amazon TextTract, which is an intelligent AI document processing service, extracts information, but then I shove it to another AI service such as Amazon Comprehend, which is a natural language processing service. Look for exactly what I want to have in this proxy form, and then based on that, shove it to another machine learning model that I'll customize in something like an Amazon SageMaker to predict potentially contentious shareholder meetings. Right, so here's the key point, chaining things together. And by the way, you can do this across platforms. I gave you an example here that is completely in AWS, but if you want to do that across platforms, that same idea remains, right? So that's really the power of what you can do. Last but not least, we want to be careful what we are doing, right? So one of the things that is very important is how can I make sure that when I use AI or machine learning that I actually know what I'm doing? And I would often refer to this as responsible AI. And I just gave you a few examples here of things that made it pretty public from Dutch tax authorities that wrongfully accused people of tax fraud, or a trading algorithm in Hong Kong that wasted $20 million in a few seconds. The big question was, well, whose fault was it? Was it the algorithm or the one who enabled the thing or the salesperson who sold that algorithm? So one of the things that we want to do is we want to know what my model is doing. Now, I could talk for 4 hours on just this topic. So this is just one thing I want to mention, but that's a starting point. There are ways to actually understand how my machine learning algorithm performs. What are some of the properties and the variables that actually affect my output? And this gives me explainability of my machine learning model. Now, most financial regulators, and I would argue everyone should actually ask their financial service companies, explain why you did a certain thing, right? Don't have it as a black box. And there are things such as SHAP, the Shapley additive explanations, which comes actually from gaming, from a gaming theory, which looks into, well, depending on what input I have, how does it affect my output and which parameters mostly affected that output. And then I can go back into manual review and say, oh, hold on, that shouldn't really be the variable who determines this, right? And then I can go back and retrain. Also works on computer vision, which you see at the bottom here, for example, where you have the dewitcher and the sandpiper or the meerkat and the mongoose, and I understand which pixels help, have the most impact on making that image classification decision here, for example. There are ways to do responsible AI. Again, if you're interested in this topic, please talk to us. Yeah, we do have many different services on AWS, such as Amazon SageMaker Clarify, for example, where you can do like fairness and bias evaluation. Is there a certain bias in my data set? There are things such as Amazon SageMaker Clarify to explain what a model is exactly doing. Of course, have ways to do pipelines to exactly reproduce what you've done that allows you for auditability, all the way to continuous monitoring, security and privacy, and of course, human intervention last, right? Again, really big topic, but I just wanted to get this out. If that's of interest, please have a conversation with us. Now, last, I think we do all of this because we can actually make a difference. Why are we all here? Because we believe that innovation in the financial service space can actually make a difference to people. And why is that really important? One thing that is very dear to my heart is financial inclusion. I come from Luxembourg, so as you can imagine, everyone had a bank account and everybody was financially included. I think that is not the same case everywhere in the world. And that's actually an opportunity. This is a quote that I took from the Asian Development Bank. They said, addressing the financial needs of some of these micros and SME segments in ASEAN could even increase the gross domestic product, the GDP, from 9% to 14%. So it's not even just about doing what is right, in my opinion. You can actually even create business out of it. Well, that's a win-win situation. Now, I did mention I'm going to go back to Thai credit as an example earlier, and I think that's a really great story. One of our customers, so I take zero credit for this. It's all they're doing. But I think it's a good example of, looking at an existing retail bank and say, what if we refocus on micro segments, right? I become a specialist in micro segment, and that's exactly what they did over the last 5 years. And the idea here was like, if I want to make an impact on including people financially, I want to do exactly what I talked about earlier, approve loans very quickly, effectively, efficiently, with different data points that I have across. From small merchants that maybe are daily earners, right? So they sometimes have been forgotten. Then they go to non-formal institutions. They have informal lending channels. Sometimes that might be loan sharks. That's not really something I want to have. They start borrowing money. That's not really good. Now, if I can actually give them access to repay those loans and go into a formal institution, I have an actual impact on those people. And this is a slide that basically came from Thai Credit. This was some of the answers they get, right, from their actual end customers. I have access to formal loan with a lower rate. That's great. I can pay my credit line. Online transaction is easy. This is actually changing people's lives. So that's really what I think we're after at here. And last but not least, everything I said today probably holds true today, but everything changes all the time. So let's all try to make that change together. Thank you very much for your attention.
Big hands to Olivier, Client Chief Technologist from Amazon Web Services. Thank you very much for the insights and an inspiring story of how technology can impact financial services and, more importantly, financial inclusion. Ladies and gentlemen, it has been a great pleasure and a wonderful experience in taking you all through the journey of digital finance. As always, you are the key to our event, so please scan the QR code as shown on the screen for feedback and comments for what you like and what improvements can be made for future occasions.
Feedback links will also be sent via email for you for those who register at our event. So please do give us your feedbacks via the link. For tomorrow, you are all welcome to join us at the library stage for the sessions in career talks and recruitments. So also the exhibitions and the STAR stage will continue showcasing financial innovation. So please do be welcome and joining us for that. As for us, it has been an honor to be the host for the BOT Digital Finance Conference. On behalf of the Bank of Thailand, we would like to express our sincere appreciation for all of you who join us, the audience, the speakers. Thank you very much for joining us at the BOT Digital Finance Conference. We hope to see you again. Please enjoy the rest of your evening. Have a safe trip back. สำหรับวันนี้เราลาไปก่อน สวัสดีครับ
สวัสดีค่ะ